probably wondering why I'm saying it's good. Well, it's because nothing really changed since last week. Now, what's interesting is if you look at the Dow Jones on the weekly candles, it's like, yeah, you had a pretty bearish candle here on the weekly here, for sure on the Dow Jones. But things are not always as they seem on the surface. And I think that actually has, in this moment, a lot to do with what crypto has been doing in this time that the Dow Jones has just been getting absolutely slaughtered, right? Absolutely slaughtered. So all the way back to that week in June where we thought maybe that was a significant bottom, and it was followed by a major rally. Oh, but guess what? We got a new bottom. So before I take a look closer at crypto, I will just point out this because I know some people in the comments have been mentioning about RSI. So you know what I'm going to say about the RSI here. You're forming bullish divergence on the RSI. On the weekly RSI, you are forming bullish divergence that goes all the way back to May, right? So you have RSI creating a series of higher lows here, right? As the Dow Jones continues to fall. So the RSI is telling us that a shift in momentum is underway, which sort of negates the idea that we're going to have a continuation of this move to the downside, right? It's unlikely that this move will continue straight down. Now, we might set lower lows later, definitely. Maybe on Halloween, we'll set a big low, some scary moment. But I tend to think that the probabilities actually favor another upswing off of this move. And I really think crypto is sort of giving you a major clue when you look at how crypto responded to what the stock market did over the past, I guess now 2 months, almost 2 full months. So if you go back to that low that crypto's been holding, look at Bitcoin right here. Look how it's sort of moved relative to the stock market. It hasn't been really volatile. It's just been holding that low. Now, you could say that this is just setting up for a massive dump here. You definitely could say that. But I tend to think that you actually have a lot of respect for the 2017 high here. That's what this is all about. This is really just a giant test of the 2017 high, right? And think about this, right? Maybe, just maybe, there's actually more people who bought the top of Bitcoin back here. And they tend to think that this is an actual good time to be averaging in on Bitcoin price. If you've been a Bitcoin holder all the way since the end of 2017, right? And you've just seen how this thing's moved, and you see that this is tending to hold a lot of support right around that 2017 high, you are probably thinking that this is actually a good buying opportunity. Now, who are these theoretical people that I'm talking about? I'm mostly talking about large institutional investors who maybe are not as bearish as the media and the general market sentiment would have you believe. I actually think larger institutional investors are probably really bullish right now because of pure probabilities. Pure probabilities alone. What are those probabilities? Well, one of them has a lot to do with the fact that you don't really see something like this very often. You don't see a massive sell-off with this many, 3 red candles in a row on the weekly chart, as a part of a larger downtrend here. But then you start to see the momentum shifting on the RSI, and you also start to see that this move could, if it's going to find support, this is sort of that do or die moment. Well, maybe it's finding support here. It definitely had some support on that pre-COVID high, and it broke through a little bit, not a ton, but it's finding support here on these levels. It filled this gap, right? Huge gap. This was unfinished business for a long time. And now you filled it. Now, the thing is, the gap goes actually a little bit lower here. I'll just zoom in a little bit closer here. This gap is what I'm talking about. This gap is hugely unfinished business, right? If you just look at that, it's like this needed to be addressed, because I don't know how many times I've said this on White Knuckle, but generally speaking, gaps will be filled at some point. This gap was left wide open for a really long time. So it's possible that we do see some downside to complete the finishing of that gap, because as you can see where the price is here on the red line here, the price hasn't completely filled this gap here. It's right in between. So if there is to be more downside, I think it would conclude at the bottom of this gap. I think that's very likely. So we're just talking about probabilities. We're talking about likelihoods. We got to hedge for everything. We don't know what's going to happen, right? We're just thinking about probabilities here. But we see bullish divergence. We see a gap that's being filled potentially. And what else do we see? We see this weekly candle on the good old DXY here, right? We see basically the worst bearish weekly candle we've ever seen. And I keep saying this, right? Like, oh, another weekly bear candle on the DXY. Oh my God, maybe it's finally time for reversal. I don't freaking know how long this thing is going to go before it's going to reverse. But at this point, the probabilities are favoring the reversal more likely. The reversal is more likely than the continuation of the upside. That's how you have to think in terms of probabilities here. And let's just pull up the RSI on this one, because we're looking at the RSI on the Dow Jones. We see that bullish divergence on the Dow Jones RSI. Do we see any bearish divergence on the RSI for the DXY? Yeah. Oh, yeah. Yep. We see some really good bearish divergence, right? You see high, lower high, and see, this is that bearish divergence here. Well, it's really cutting it close, right? But you do see from this level back in May, you see the RSI starting to move a little bit down, and it's also out of headroom on this thing. I mean, how much higher can you actually go? How much more overbought can you get in this trend, right? I mean, not a whole lot. And it's possible that maybe the DXY will continue a little bit higher while the Dow Jones finishes that gap. Maybe that's how that's going to play out. But the thing is, you can really see really nicely on the DXY how RSI kind of anticipated this giant parabola that's occurring now. Of course, no one really knew how high this thing was going to go, but RSI did tell us that a major upswing in the dollar was coming all the way back from here, right? So you start to see the RSI making higher lows and higher highs while the DXY is still making lower lows and lower highs in a downtrend, right? So that's how RSI works. RSI can tell us ahead of time when the trend is starting to shift. That's what we really see clearly on the DXY. You see the downtrending DXY, but you see the uptrending RSI, right? Now you might see the beginning of a downtrending RSI potentially before that DXY starts to actually move to the downside. And in the same way, you see on the weekly chart, you see higher lows and higher highs for sure on the weekly RSI of the Dow Jones. That puts the probabilities in the favor of you're starting to get ready for a significant reversal in these markets. Now, the thing is you really, at this point back in May, you really didn't have evidence to believe that a reversal was coming, and you still got one, right? You still got a big green candle back in May. I remember that. That was very unexpected, actually. Now you're starting to have the evidence is starting to pile up that you are potentially beginning a reversal. Now, you could still create more bullish divergence on the RSI if, say, for example, we bounce, right? We bounce, the first couple of weeks of October, right? You bounce, and then you set another low, right? And maybe that's how this gap gets filled here, right? Maybe you actually bounce right off of this point only to fall even lower to fill that gap later in October, maybe around Halloween, right? And then when that lower low is set, the RSI sets another higher low, right? That's how those things can play out. It takes a long time for these bullish divergences to actually show up in the price action. So we have that 1, 2, 3 higher low situation, and maybe it's going to take a fourth. Who knows? I don't know. Maybe 3 is the number. Who knows? We don't know that yet. But you are starting to see that positive sign in the RSI, and then you're also just starting to see the fact that this thing rarely does what we've seen here since August. We rarely see this many bearish candles in a row. Literally look at the recent history on this chart. Not even during this moment did we see something like that, right? So you're definitely very oversold here, right? And even in that oversold scenario, you are starting to see that bullish divergence show up on the RSI here. And then at the same time, you have Bitcoin just sort of holding, right? Sort of holding. Now, this definitely, like, super hard to tell what Bitcoin is going to do if you isolate Bitcoin on its own, right? I mean, technically, you're in a downtrend, right? You're just seeing, low, lower high, lower low, lower low, lower high, right? That's a real downtrend, no doubt about it. You can't necessarily say that you're just suddenly going to break out of a downtrend out of nowhere, but when you consider the confluence of, the DXY and how it's just continued to rise while Bitcoin has not continued to fall, right? So in confluence, you can sort of see that Bitcoin might be telling us, Bitcoin is maybe a leading indicator that DXY is running out of momentum and the Dow Jones is running out of momentum to the downside as well, because Bitcoin is just holding here, right? And it's not holding at some random level. It's holding at the previous all-time high from 2017. So that, a lot of that stacks up to, this is a significant level, right? Yes, you're in a downtrend, but you're also holding at a very significant level for an extended period of time, right? From June, and now we're all the way into October, and you've just held here. As the market, as the broader market, the stock market has just pulled down, right? Crypto, not just Bitcoin, but crypto all the way around has held, right? It's been holding for a really long time. Some of these coins all the way back to May, they're holding at this level. This is a significant level. Filecoin too, holding at this significant level all the way back to June, right? Some coins holding at the level, at this same level, even farther back than June. Others holding that June low, because that June low was a significant, low, and we bounced right off it. I would argue that something very similar is happening here. This is starting to set up a significant low. Now, does that mean we're just going to rocket to the upside right out of here? Not necessarily. I think what could be happening here is you're going to initiate that early October bounce, and maybe you have a mostly bullish October, only to result in like the Halloween nightmare crash where everyone really like starts to think like, oh, here we go, 2008 all over again, right? But the reason why I wouldn't necessarily advocate for the 2008 situation is because of what the RSI is telling us, because of what Bitcoin is doing as a quote-unquote leading indicator. It's just holding here, right? If it breaks below this level, well, that's a whole different story, but it hasn't yet. It hasn't. So theoretically, you got to think that it's worth it to start nibbling on these assets at this point, right? One thing I'd say about this market too, compared to say 2008, because, I think a lot of people are starting to see, oh, here we go, October, Halloween. It's going to be that 2008 October Halloween nightmare for sure. Well, first of all, too many people are thinking that, right? So that's probably not how it's going to play out. And the thing is, if you go back to 2008 here, I think the key thing to understand is what the RSI is relative to what we're seeing right now, right? So if we look over here in the RSI, you see those, those higher lows starting to form, that one higher high starting to form, right? Well, look how 2008 really played out. You didn't have bullish divergence until this thing literally like fell all the way into hell, right? Like really, really went down there, right? Like a classic type of capitulation. In this moment here, we actually have the bullish divergence coming in before, a relatively similar capitulation to what we saw in 2008. This, in fact, could ultimately end up being a capitulation moment. Or we could get one more lower low setting that higher low on the RSI, and that could be a capitulation. But, not all capitulations are that, giant cathartic release like you had back here and like you had back here. They don't all have to look like that. This could be a sort of different capitulation. And the reason why is because in 2008, you have to realize like this market was like rotting. It was really rotting. Like people were doing really, really dumb things in the finance world, right? The lenders were lending money to people that they shouldn't have lent money to, right? That's how this worked. It's not the same situation here, like this moment in the market, the housing market, the stock market, the financial asset market, you don't have the same stupidity going on in terms of market participants that you did in 2008, right? Like, there isn't even a whole lot of generalized stupidity in this moment, right? Like, even the Fed, they're not really that stupid in terms of what their actions are. They're doing like basic things that they should be doing. Like they should be raising interest rates, right? I don't really know how they think necessarily, but I would tend to think that they're aware of history, right? They're actually aware historically, like we've talked so many times about in White Knuckle Report, historically, like this huge move right here, this was all rising interest rates, right? This is rising interest rates. The Fed probably understands that raising interest rates isn't what's going to cause this market to crash, right? So if they understand that they're not being stupid by raising interest rates. So anyone who says like, the Fed's going to break the market, they're raising interest rates too quickly. It's like, I don't think that. No, that's not how that works, right? They're just doing what they have to do to look like the good guys, right? And how do they do that? They're looking like the good guys by quote unquote curbing inflation by raising interest rates. But you got to remember that, their ultimate goal historically, right? It's not to actually curb inflation, right? That's not how, the Western economy works. Curbing inflation isn't a fundamental goal of the establishment, right? The establishment wants, in the long term, they want to remove purchasing power from the masses, right? They want the masses to be reliant on the government. How do they make the masses reliant on the government? They remove the purchasing power from the masses. How do they remove the purchasing power from the masses? They basically debase the currency by doing different things to cause inflation, like, printing money and things like this. So if you understand that, the long-term goal of the Fed is more about debasing the currency, then you realize that what's going on right now, they're raising interest rates, but that's more of just like a theatrical sort of thing to make them look like the good guys. Long term, they don't really care if they destroy us with inflation. They definitely don't. And we can sort of see that that's what the Bank of England is already sort of admitting, right? They've admitted, by now they're sort of quantitative easing, they're turning the money printers back on. They've sort of admitted that they don't actually care about inflation, right? They don't, it's only like a theatrical, like, hey, look at us, we're the good guys, we're trying to help with inflation. When in reality, it's like, no, we're going to turn those money printers back on the first moment we get, right? And that moment could be, in the case of England, it's like people are like, oh man, you're going to break the market. Like, stop raising interest rates. You're going to break the market. You're going to, eliminate demand. And then they're like, oh, yeah, no, you're right. We're going to, sorry. We didn't mean to like eliminate demand so quickly. So let's, turn back on the money printers and start demand back up. That same logic could actually cause the Fed to pivot at some point. I don't know when that will be, but at some point. And remember, when the Fed pivots, let's go back into the, let's just take a look at the old Fed funds rate while I do this final spiel here. So this is really important to understand. When the Fed actually pivots, right? When they actually come out and say, we're lowering interest rates, we didn't realize we're going to cool off demand so quickly. Like, you know what? Okay, our job is done. Inflation is curbed because assets have, come way down in price, like oil, housing, things are coming down in price, right? So technically what they're doing with raising interest rates is actually working to curb inflation. So that makes sense. So at some point, I don't know when that is, when the Fed comes out and says, all right, you know what? We're done raising interest rates. Maybe they're not going to necessarily lower them, but maybe they'll stop raising them. When that happens, that's part of the theatrical moment of these markets. When that happens, the market will be in euphoria. That will mark the final move up in this market. So wherever that occurs, the market will move up significantly. But realize that move will be the final blow off top move, just like we saw here. This was a final blow off top move. Interest rates start coming down. The narrative is, oh, interest rates are coming down. Perfect. Like, now the economy is, demand is back in the economy. Great. We're super happy. And then you get that short-lived blow off top moment only to result in one of these, right? So that's really important to keep in mind. When the Fed pivots, you will have your final up leg in the market, but it will signal that the market is now, like the bull market is over. Like that's the end game. Get out at the top of that move. When everyone's euphoric and everyone's thinking this thing, it's never going to stop because the Fed has now eased monetary policy, that will be the moment where this thing crashes, and you might see, that, giant second Great Depression situation start to take shape. So that's what you really got to remember is the Fed pivoting will mark the top of this market. Now, on the flip side, if the Fed doesn't pivot, right, and the market starts to move up, well, then you actually have the makings of another extended massive bull market. Like the market could keep going for a really, really long time. And the fundamental case for that is like there's enough liquidity in the system for that to happen. Absolutely. So if we're going to get an extended upswing and we just start a new bull run after this like whole bearish thing that we've been in, it's only going to happen because the Fed doesn't pivot and then the market just starts to rise and the Fed's not pivoting, right? If the Fed pivots, then the market will top after that euphoric Fed pivoting moment, only to result in a massive crash. If it happens like that, which I actually think is the most likely situation, I think it's more likely that the Fed pivots and they cause a euphoric blow off top only to result in a crash. Well, then you're going to have crypto, altcoin, psycho Christmas, like you're so rich you can't even freaking believe it. That's what's going to happen, if the Fed pivots and you have that sort of like short-lived euphoric moment. If they don't pivot, you might have just a slow grind. You might have like just a slow grind to the upside. But the reason I think the Fed will pivot and cause that euphoric blow-off moment is because the macro economy landscape is just, it favors more of like a giant economic, crash situation, right? In the upcycle in the dollar, this uptrending dollar, that also tells you that equities and cryptos and just general financial instruments are actually about to lose a lot of value because as dollars are going to keep rising. So that's why I'm more leaning the side is you're going to get a Fed pivot blow off top maybe in the next 6 months. I don't know. I have no idea. But that's really going to be how the market ends, I really think. So that's, hopefully that all makes sense, dude. I just like, it's good, right? Like you can kind of see why it's good, right? Maybe in the near term, it's like you get a bounce. Maybe you set a lower low in, Halloween low in October or something like that. But I do think, into the end of this year, you're going to have some bullishness, right? I think you're going to get Cryptmas. I think Cryptmas is coming this year. I really do. It's like, it's going to be like Bitcoin, like it's going to be like literally what we always thought, right? It's literally going to be like Bitcoin retracing the 702, finally getting that retrace in, right? It only comes up to, this level. It doesn't set a new all-time high. But in that retracing moment, the altcoins go absolutely freaking ballistic. Ethereum goes absolutely freaking ballistic. I don't even know. Maybe it goes, basic Fibonacci's. I mean, where would I sell Ethereum off of this point? Probably sell it. I'd probably start being cautious around this level, right? This freaking level. And that has a lot to do with the confluence of the Ethereum triple halving, right? So you have that fundamental bullish catalyst in the altcoin market at the same time as all of this other backdrop stuff I'm saying here is going on, right? You're starting to see the makings of a bottom or a near-term bottom in the Dow Jones. And that is, that's going to set up that Cryptmas situation. I think, I listen into my heart. I'm not listening to the news. I don't really take in other people's information because I feel like you have to sort of come to your own conclusions in this stuff because, a lot of this, market, realize nobody knows anything, when it comes to the market, right? Nobody can accurately, consistently predict how this stuff goes. So my intuition is just as good as anybody else's theoretically, right? So I don't really need to listen to other people. Yeah, I want to learn how RSI works. I want to learn how Fibonacci's work. I want to learn how Elliott waves work. But then I apply those in my own view. I don't take other people's views and apply those. It's like I use the tools and then come up with my own conclusions. So these are my own conclusions. Yeah, it's probably, I'm assuming, pretty contradictory to what other people and what the general, masses are feeling at this moment. I think a lot of people think we're heading into a free-falling waterfall situation. But what I'm saying is that's what could have happened last week. It didn't happen last week. I don't think it's going to happen this week. I think you might be starting to form like a bouncing situation. It could result in another lower low that results in a higher low on the RSI, and then that sets you up for that, November, December, sort of bullish move, like a move sort of like this, but maybe a little bit bigger, and a little bit shorter lived, more explosive. So that's why it's good, dude. Like, that's why it's good, dude. It's pretty good, dude. I'm excited for Tool Tuesday this week, too. I love to come back to Anima, dude. So, all right, dude, I will see you